All right, what's up everyone? Greg here from Investing in Gold, and beautiful night out tonight, so I want to shoot a video outside. So if you hear some dogs barking or planes going overhead, don't mind them. Today's topic is market crashes and their effect on gold. Right, I got my lucky 007 piece of gold, as I always do when we talk about gold. So let's first talk about what a market crash is, because that's important to understand. And a market crash or a market collapse is basically a drastic drop in stock prices over the course of several days. And it's also often driven by panic selling, or more practically speaking, it's usually considered a double-digit loss over the course of several days, so like a short time frame. And it can have a severe impact on the economy, right? I mean, you can see recessions or depressions out of it. You can see high unemployment rates, severe wealth loss. So it can have a lot of effects on the market, but it's not to be confused with corrections, which is like a 10% loss over a longer period of time, which are totally normal, even in bull markets. And it's not to be confused with a bear market, right? Which is like a 20% loss of recent highs over the course of a longer time frame. Market crashes are a little different. They're usually quick. Again, usually driven by panic selling, some type of event, and that's what a market crash is. So, a market crash can happen if the downward trend continues from a correction or a bear market as well, right? So, although a correction or a bear market is not necessarily a market crash, it can lead to that if that trend picks up and continues, because people can start to panic from that. So that's another important piece of information to understand. Another thing that you should really be aware of when it comes to gold market crashes is the history. One of the most recent events we had was COVID-19, right, in 2020. And during this crash, gold went from about $1,500 from at the beginning of 2020 to about $2,000 at the end of 2020. So you had about a 33% increase there, however you want to look at that. But we saw a pretty good increase in gold. And that's just one example of gold doing really well in a kind of economic uncertain time, right? Or during like a market crash, so to speak, because the markets did crash during COVID. And actually, I believe during COVID, we hit a level 1 trigger in the stock market, which is where you hit the 7% loss and you pause trading for 15 minutes. I don't think we ever hit level 2, which is 13%. We definitely didn't hit level 3, which is, the 20%. And of course, all of that was introduced in, I think it was 1987. I think it was October 19th, 1987, Black Friday, when we lost 23% in one day from the stock market. That's when they actually started implementing those triggers in the stock market, and that's one of the reasons they did it. Then, of course, we had the 2008 financial crisis, which is probably the next most recent one I can remember, where the price of gold, I believe, was around $800 in 2008. And then by 2011, 3 years later, it had gone up to about $1,900. So those are just two examples of recent history events where we saw some market crashes, and of course the price of gold went up. Now, it's important to understand that just because a market crash happens doesn't mean the price of gold is going to shoot up right away, and usually it doesn't. Usually it takes time and it slowly builds up. That's a good thing, right? Anything that shoots up too quickly usually can also come down too quickly, and that's also the opposite case with gold. Usually you're not just going to see it shoot right down out of nowhere. It'll just slowly trickle down, or it slowly trickles up. I say slowly, but it has risen very quick in certain situations. For example, it depends on how you look at time, right? So since 1930, the dollar has lost 97% of its value against gold. So yeah, that's about 100 years. It depends how you look at that though. $35, I think it was $32 for an ounce of gold back in 1930, up to almost about $2,000 an ounce now. That's a huge increase, right? And especially when you compare it to the dollar. So it just depends on how you look at time frames. I don't personally look at 2 to 3 years as a long time frame, and I'm willing to double my money in 2 to 3 years when I think the markets are going to be doing bad. I might put a little more into precious metals, and that's just something I'm willing to do. It's no secret that gold is seen as a safe haven during times of crashes or market collapses. I think it's pretty well known of that, and often it's used as a hedge against inflation. And inflation usually happens during these market crashes because the governments are doing things like they're lowering their interest rates, they're increasing the money supply, and this of course leads to the inflation. And then, gold is a tangible asset, so it works out in the favor of gold when these things happen. And anytime something like now is going on, usually I look at that as a time to start investing in gold. The interest rates are way down and the Fed is just printing money over and over. This causes inflation, and that's a good time to usually start buying gold. And historically, that has been the case. Now, I like to go by history. Now, I should have said this in the beginning of the video. It's important to know that I don't think you should put a ton of money into precious metals, right? I'm a big proponent of diversifying. So I'm not just going to throw 100% of my money into precious metals. I actually stay more to the 10 to 20% range. And I think it's smart to diversify across the board, because that diversification is what can really keep you safe during times of uncertainty, right? When the stock markets are going down, well, typically your gold's going to go end up, or your precious metals are going to end up going up, and it's going to level the playing field for you, right? So back in 2008, if you had all your money in stocks, typically you lost about half your money. Whereas if you had, even 20% of your money in precious metals, you likely made money from that crash, just because of the difference between your precious metals versus your stocks. Even though it's only 20%, that would have caused your portfolio to go up to at least break even, or even, maybe even a little above. So that's why I really like to have gold in my portfolio when it comes to crashes, because it can really level things out, right? Also, gold, as a lot of people know, has high liquidity, right? It can be exchanged anywhere in the world. It has a stagnant price worldwide, and it goes by US dollar, which is great, right? So anywhere you go in the world, it's very liquid. You can get rid of it very easily, and it's the same price. It's standardized across the whole world. And that's one thing that I really, really like about gold. The next thing is supply and demand, right? So during times of market crashes or economic uncertainty or economic struggle, well, what happens? Well, sometimes mines shut down because guess what? They're having more trouble keeping up with the demand because there's not as much money flow, right? So a lot of mines will end up shutting down. So guess what happens? Well, the supply of gold goes down. And if you know the economics of supply and demand, supply goes down and typically the demand goes up because people see the inflation happening and the money printing, and they're pulling the money out of stocks because they're dipping and dipping. Well, the demand for gold's going up, the supply's going down, and that creates a very good formula. And that's one of the really big reasons why gold does so well, or precious metals do so well, in times of economic uncertainty, and especially in market crashes. The last thing I'll kind of bring to mind is I like how gold has been somewhat stagnant over the last 12 years, right? So, in 2011 or so, we hit like an almost high. It was around 2000. It's kind of fluttered throughout the last 12 years, where it's going up, down, up, down, up, down, right? It's kind of been, if you follow a straight line throughout, somewhat stagnant, or at least might have done this and going up and down a little bit, but generally we're at the same price we were now 12 years ago. And some people may look at that and say, well, that's a horrible investment, right? Well, usually what happens with something like that, if it stays stagnant for a while, when a time of economic hardship happens and it's an asset that typically goes up during those times, it can launch up. And that's what I really like right now, especially is we have a time where it could be very likely we see bad economic times, which means gold could be going way up, precious metals could be going way up, especially since it's been stagnant for 12 years now. So just think about your current stance on where you currently are with precious metals. Are you comfortable? So in closing, just think about, where are you? Are you 100% stocks? If so, you may want to think about doing a little bit in precious metals. And you can just start with a little bit if it makes you comfortable. And are you prepared for a crash? If a crash happens, is all your money in something that's going to go all the way down? Do you have anything to offset it? Even if it's not precious metals, do you have something else? For me, precious metals has just been a great way for me to sleep better at night, especially in the times now, because there's a lot of things that could be happen to trigger a market collapse right now. I mean, you got a potential World War III looming, you got money printing out the butt from our government, you got inflation through the roof, low interest rates. So there's a lot of things right now that scare me, and having just 10-20% range of precious metals makes me feel better, because I know if that market crash happens, my portfolio is generally going to stay stagnant or even maybe rise a little bit, while most traditional investors are going to be going way down. So just think about where you are in your life right now, if you could survive a market crash, or would you feel better with something to kind of offset it possibly. So that explains market crashes and precious metals. Hopefully that helps you understand it a little better and possibly navigate the waters a little better. So make sure you like, comment, subscribe. We'll see you in the next video.